Welcome to Cambridge House Live. I'm Bridget Anderson at the Vancouver Resource Investment Conference. I'm joined by Louis James, who's the Chief Metals and Mining Investment Strategist at Casey Research. Thanks for being here today.
Glad to be here, Bridget.
Back in June, you said that an economic apocalypse is coming. So walk me through your thinking on that. That's a good way to start. And then tell me, do you think things have changed on the last 6 months?
I had to pull out my mild statements there, yeah.
I just thought we'd get going with a bang.
Okay, let me address this way. What happens when there's an earthquake, a financial earthquake, but a real earthquake, and you're on the coast? There's going to be a tsunami, the government puts out a tsunami alert, but what happens to the water at first? It recedes. And everybody thinks it's safe to go out on the beach. I have a concern right now in the current market, sort of broader market space. We can look at our micro sector later, but the broader space, I really think that there's a danger this year of people having a sort of pre-tsunami effect. There's positive numbers out of China, there's housing starts in the US, there are a number of numbers that look pretty rosy, and people are getting excited, and I think it's lambs to the slaughter, or shell picker-uppers out on the beach before the tsunami comes in.
So it's safe, but not really?
Not really. I mean, when the tsunami comes roaring back in, you can't outrun it. So no, actually it's not safe. There may be opportunities to pick up some really shiny shells that have been left by the receding water. But don't go very far and be very quick to exit. In practical terms, what does that mean?
Yeah.
I would look at industrial metals in a way that I wouldn't have a year ago, because these rosy numbers probably will have their impact. The water will retreat, and for a time, I know that a lot of people are talking about how bearish this market is, but I can actually see it seeming to go the other way for a while.
Can you put that into any kind of time frames? I mean, any time ranges that you're looking at?
Over the course of this year,
okay.
2013 only.
Yeah.
If I bought into, say, copper plays now because of this, I think there actually could be money to be made in copper this year. But I would not get into anything that's thinly traded or illiquid. I need to be able to get out very quick. Like I say, when that tsunami wave comes roaring back, you don't want to be stuck on the beach. And so I would look for liquidity. I would also look for near-term gains. I would look for some company that's about to achieve a major milestone or some difference. I'm not looking for a long-term investment right now.
So in practical terms, what does that mean for investors when the tsunami hits?
Well, I mean, we've talked a long time about exiting the eye of the storm. That's the other metaphor we like to use. When that tsunami comes back, financial apocalypse is a quote you mentioned. I mean, it's going to be bad. Doug Casey, my boss, he likes to say it's going to be even worse than I think it will be. I don't want to draw a picture. It's hard to say, but I would say that 2008 was the opening act. So if you didn't like 2008, you're not going to like what's coming even worse. And
how much of this stems from what's going on with the U.S. economy when you look at the level of debt and what's going on with the Federal Reserve?
Right. It's all part and parcel. I don't think you can entirely separate out what's going on in Europe. And I think it's important not to forget, the optimists right now, they look at the better numbers out of China, the better numbers out of the U.S., and they seem to somehow forget that Europe is falling apart at the seams over here at the same time. These two things don't fit very well together. But yes, the U.S., it's not just the U.S. is the world, it certainly isn't, but the U.S. dollar is still the reserve currency of the world. And what has implications for the U.S. dollar has implications for global investments, and certainly for monetary investments, monetary metals, gold and silver, our favorite investments.
So if that changes then, what are the implications of that?
Sorry, the change?
Around the dollar, the U.S. dollar, if there are changes to that, then what does that mean?
I guess it depends on the kind of changes. If we see sort of the status quo moving along, if the papering over of the crisis succeeds in kicking the can down the road, as we say, you see the savvy investors, you see the people who get it realizing that this is bad for the dollar, and you see that pricing in. But maybe not the average person. It may take that tsunami rumble before the confidence game is up. So what does that mean in practical terms? We either see a continuing sort of slow degradation of the US dollar and its implications, or we see it snap. We see the straw that breaks the camel's back. It's hard to predict when that last straw is going to do that, but when it happens, a loss of confidence in the world's de facto reserve currency is a major, major event.
So what does that mean for the resource market then?
What it means, going back to what I started with, is I think that this year there is actually an opportunity in commodities more broad. The appearance of recovery, all commodities,
Yeah,
all
okay.
commodities. I'm a mining and metals expert, so I'm thinking when I say commodities mostly about the industrial metals and the metals in general. That's my sphere. But I would say that in commodities in general. That could be a little bit bearish for gold. You know, if the fear recedes, and to the degree that gold has that safe haven aspect going to it, it could be that gold recedes a little bit, but I don't think much. I don't see gold cratering. I don't see gold going back to very low numbers. I don't see it going down much at all, because for gold to really retreat, people around the world would have to come to the conclusion that everything is okay now. There's nothing to be afraid of. And given what's happened, even if people think things are getting better, they're not going to say, okay, I don't need any safety anymore.
So when you look at commodities, like copper, and you see what's going on in China, if those numbers are to believe, there's still a fair amount of growth there, and you look at other emerging markets that are starting to come online, India, maybe Indonesia, Brazil, et cetera, how much of that will fuel demand for things like copper?
Well, that demand is, I think, absolutely baked in the cake. I mean, it may go up and down if we do see a financial apocalypse, if we see real negative things happening in the near term. Obviously that's bad for them. But the fundamental driving demographic is the world's population, which isn't getting any smaller. And these people in China and India, they want refrigerators, they want cars. So longer term, all of this is very good. What this really tells us is, if there is a big correction, a big crash in industrial commodities, that should be viewed as a buying opportunity. A lot of people confuse Casey the Perma Bear with being against the base metals or somehow not interested in them. That's not our take at all. Our take is that if we're right, and if there is a big correction or a bigger correction coming, there's a great buying opportunity coming. And we really don't want to get in front of a buying opportunity. We want to buy low.
Right.
So that's what we're looking at.
When you're looking at those buying opportunities, one of the things that you do for your job is you do a lot of traveling. And so you've probably traveled to, I would guess, more than 100 countries. Are there any jurisdictions that you really like, or ones that you don't like, that you stay away from?
Yeah, well, Doug likes to say you can run but you can't hide. I'm looking at the viewers here to tell them that you can run but you can't hide. I mean, even Quebec has adjusted its royalties. Nothing is sacred. There is no place that's completely safe, even in the most pro-mining jurisdiction in the world. It's a dirty choo-choo train industry is what Doug likes to call it. People don't like mining. It's not popular. It's not with the ethos of environmental protectionism that we have accepted globally around the world. It's not welcome anywhere. That said, obviously, countries that have demonstrated a penchant for nationalization or just really burdensome regulation or not interested in foreign investment, you want to stay away from those. I wouldn't go to Bolivia, for example. Its metal endowment is phenomenal, but I'm just not interested in Bolivia. I love Argentina, great place, but right now the national government there has shown itself to be not very friendly to foreign investors.
Right.
So,
and parts of Africa, I think, would you say the same?
Parts of Africa, that's Africa. There you're really looking not so much at political risk in the sense of the grab, but violence and revolution and so on. Mali, for example, was stable for several elections. It looked pretty good, and then suddenly the place went up in flames again.
Now, I interviewed Doug a little while ago, and we were talking about his new book, Totally Incorrect. You were the interviewer on that book. Tell me about that. What was that like?
Those conversations.
Exactly.
Well,
so you were on this end.
For anybody who's read the book, you can tell. We have a lot of fun. And the truth is, actually, I started working at KC Research because Doug and I were friends. We have a similar political outlook. You can tell that from the conversations. Sometimes I play a little naive, or I draw out questions because I know what the readers would be asking. Particularly when Doug says something very outrageous, which is every other statement.
Pretty much.
Yeah, right. So I draw him out. What do you mean by that, and so on. But we understand each other. We've read the same books. Our thought processes have gone down the same parallel pathways. So I can pull him out, and it's just a lot of fun. It's fun to explore. And as much as it may sound like we think the same, we don't. He has a few more years on me. He has a much greater expertise in his areas of history. He loves Roman history, for example, and he has just more experience in the world than I do. So we talk about things, and I can zero in on the principle of the idea, and then he provides examples. And he's been to Haiti, and he saw the misallocation of capital there the last time the UN really intervened, and so on. I don't have that experience, and he tells these wonderful stories. It's great.
So you both have similar lines of thinking. How much has that influenced your approach to the markets and investing?
Yeah, it's interesting. I got my job working for Casey Research, kicking rocks and picking stocks by being the black sheep of the family, right? The radical out there like Doug. And it may seem that that's a little scary, but that actually is the Casey advantage. You know, we don't buy into the mainstream view. We don't believe everything that the hairspray heads talking to us from Washington, D.C. tell us. We're independent. We truly are independent. We're willing not only to call a spade, but we're willing to doubt everybody. And I think that's an advantage. You know, maybe we're a little radical, maybe we're a little extreme, maybe you don't agree with everything we say. That's fine. At least we question everything.
And you are always interesting. So thanks very much for your time.
Thank you.